Mastering MACD and Super Trend Strategies, a comprehensive guide for traders. In today's volatile markets, combining technical indicators like MACD and Super Trend can provide traders with powerful tools to identify trends, generate signals, and manage risk. This guide explores both strategies in depth, explains how to combine them effectively, and identifies the most liquid trading instruments where these strategies perform best. Understanding MACD, the Moving Average Convergence Divergence Strategy. The MACD, Moving Average Convergence Divergence, is one of the most popular technical analysis tools used by traders to identify potential buying and selling opportunities in financial markets. Developed in the 1970s by Gerald Apple, it remains a cornerstone of technical trading strategies today. Key components of MACD. The MACD strategy consists of three primary elements. 1. The MACD line, calculated by subtracting the 26-period exponential moving average, EMA, from the 12-period EMA. This line represents the difference between these two moving averages and provides traders with a visual representation of the market's momentum. 2. The signal line, a 9-period EMA of the MACD line itself, which helps traders confirm the strength of a trend and provides additional insight into potential entry and exit points. 3. The histogram represents the difference between the MACD line and the signal line. It provides visual cues about the strength of the trend, with positive values indicating bullish momentum and negative values indicating bearish momentum. How MACD generates trading signals. Traders interpret MACD signals through several methods. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. MACD trading strategies. MACD can be adapted for various trading styles. Day trading, using shorter time frames, like 5-minute or 15-minute charts, with adjusted MACD parameters, such as 5, 13, 1 instead of 12, 26, 9, to generate more frequent signals. Swing trading, using standard settings on daily charts to capture medium-term trends that last several days to weeks. Forex trading, adapting MACD parameters to suit the characteristics of different currency pairs, as forex markets often exhibit different volatility patterns than stocks. The Super Trend Indicator, a powerful trend following tool. The Super Trend Indicator is a technical analysis tool designed by Olivier Saban that helps traders identify market trends and generate clear buy and sell signals. Its simplicity and effectiveness make it popular among traders of all experience levels. How Super Trend works. The Super Trend Indicator is based on two dynamic values. 1. ATR period, typically set to 10 or 14 periods. This determines the number of periods used to calculate the average true range, which measures market volatility. Second multiplier, usually set to 3, this determines how closely the super trend line follows price action. A higher multiplier results in a wider band, making the indicator less sensitive to minor price fluctuations. The indicator plots a line on the price chart that changes color based on the trend direction. Green line below price indicates an uptrend, buy signal. Red line above price indicates a downtrend, sell signal. Super Trend Trading Strategies. Basic trend. Following, enter long when price crosses above super trend line, turns green, and exit, or go short when price crosses below, turns red. 2. Combined with moving averages, adding confirmation with moving average crossovers, e.g., going long when price is above super trend and 10-day EMA crosses above 20-day SMA. Thank you for watching the video so far. I hope you can make the most of it. Watch the video related to the strategy.